Consumer credit, going to talk a little bit about sort of the changes there, and then we have a really interesting panel of folks who are from the investment side, as well as maybe, I guess, PayPal now joining the S&P 500, they become an incumbent, and then you have Klarna, which is kind of one of the hot sort of upstarts in this space. So having worked at American Express, an area that I am very interested in and kind of the developments here. So again, questions online or via the app. So kind of access to credit remains a big issue, and so this is again just using U.S. and this is not a U.S. phenomena only, but I think folks talked yesterday about FICO. It seemed like consensus that FICO is not very useful, right? So Catherine at Cabbage, Ron at Prosper kind of all said that. Mike Cagney at SoFi had said it. He'd said that it's not used in their underwriting decisions, and that's sort of that's when it's there, and then in a lot of cases you see 53 million folks have no FICO score, so kind of it limits people's ability to get access to credit if that's a determinant or a driver of it. This is Mike Cagney, obviously his view on it. I think yesterday we heard probably in stronger terms that this isn't sort of groundbreaking in that nobody's, at least folks on the panel said nobody's really relying on FICO anymore, but and so then there's kind of from a consumer credit perspective, it's what are these new data sets that are out there, right? So kind of we had the alternative data panel, and this is sort of alternative data for consumer credit, right? So how can we build better risk models by looking at different data, right? And so I think one of the questions that you'll see later is, just because you have data doesn't mean it's useful, right? So I've seen comments that, if you fill in a form in all caps, that somehow has implications on your credit worthiness. I'm not sure but it sounds good. It's a good soundbite. So if we can come up with better ways to determine the credit worthiness of folks, then what are the areas where we're going to see it applied? So mortgage and home loans is obviously a big category that if we could make better decisions about who is credit worthy, big opportunity there. Point of sale, this is, I think, lots of activity here. So, hey, I'm about to buy something large, a TV. Can we make financing decisions, right at the point of sale? It's obviously happening probably a bit more online, but within stores. And then student loans is another big area. So I think this is, kind of with access to credit, what can we do? The one thing that I think gets often glossed over is the fact that with credit, education is really important. So it's very quickly, access to credit can become predatory, and so we have to make sure that are we doing things that educate people on how to use credit, and then two, are we making sure we're not extending credit to those who really aren't credit worthy, right? I mean, not everybody is credit worthy. So kind of some questions that sort of come to this. So regulation, you've kind of heard this theme throughout. How do we adapt to new technologies, new business models, from a regulatory perspective, and then how do we kind of make sure that the people who either shouldn't have certain amounts of credit or no credit, how do we ensure that they're protected, and where does the responsibility lie? Is it regulators' jobs to do it? Is it startups and big banks' jobs to do it? So these are kind of open questions.